Friends, just moments ago, in the final week of December 2025, after a full year of extreme tug-of war, Tesla's stock dropped a bombshell so deep, it's forcing Wall Street to pull all-nighters. Just yesterday, an internal analysis report that countless investors have been watching closely leaked at the same time as the latest FSD regulatory approval list. The official press release sounded almost casual, saying things like Tesla is steadily advancing its next-generation platform. The market reaction so far looks relatively calm, and analysts are arguing in every direction. But I need to warn you right now, immediately. This is absolutely not a routine industry update. This directly affects your money, and it will shape your financial standing over the next 2 years. If you think this is just another round of Musk-style hype, or a simple pricing promotion to boost car sales, you're completely mistaken. What's really hidden here is a shocking truth that traditional Wall Street fund managers absolutely do not want you to see. This isn't about launching a new car, and it's not about quarterly earnings numbers. This is a landmark event signaling a fundamental restructuring of global productivity, and the full rollout of what I call the Musk tax. If you don't understand this, you'll lose money. If you're still valuing Tesla as a traditional car company, you're using a 19th century ruler to measure a 21st century universe. This is already changing your financial destiny. Every dollar you hold, if it doesn't flow with this massive tide, will be quietly harvested by the market. So why could Tesla reach $600 in 2026? Where will the money actually flow? Who will leap into a higher wealth class because they saw this early, and who will be left behind in the ruins of the old world? Today, we're peeling this apart layer by layer. To truly understand how this will impact your assets, we first need to break through one thin layer of illusion and grasp a key mechanism: software-defined financial leverage. Think of it as a golden clamp on the arteries of the economy. In the past, Tesla made money the hard way, selling cars, grinding steel in factories. But starting in 2026, Tesla officially switches modes. It becomes a central HVAC system. It's no longer just selling air conditioners. It's controlling the airflow of the entire building. I've gone through all of Tesla's AI daily data since 2021 and carefully studied the original legal documents updated just last month regarding FSD approvals in Europe and China. And I found one fatal detail that almost everyone has overlooked. So here's the real question. Why does this perfect tool, 10 years in the making, suddenly become so critical at this exact moment? What chain reaction has it triggered? Over the past decade, Tesla has essentially been doing something incredibly boring and extremely expensive: building roads. By selling millions of cars worldwide, it was actually laying down a global sensor network. Every Tesla on the road is a data collecting nerve ending in the real world, and 2026 is the first year this data highway officially opens for toll collection. Let me put this in everyday terms. Traditional car companies are like umbrella sellers. The harder it rains, the more umbrellas they sell. One transaction done. Tesla today doesn't just sell umbrellas. It controls the rain through FSD software. It buys back the time that used to belong to you as a driver. When your car can drive itself to take ride-hailing orders, or when you're free to work while the car drives. Tesla isn't earning a $20,000 hardware margin anymore. It's collecting a lifetime. Time taxes on every mobility scenario you'll ever have. Many people argue with me and say, look at Toyota or Volkswagen. They sell tens of millions of cars a year. Tesla sells far fewer, friends. This is a classic thinking trap. You're comparing a hardware retailer with a platform that controls traffic entry points. Picture this in your mind. On the left, a traditional pool. You sell one bucket of water for one price. On the right, a city-wide water pipeline network. Every time you turn on the tap, the meter runs. Tesla is the one building the pipes. I didn't just study financial statements. I dug into the latest infrastructure developments at Tesla's Austin, Texas, and Nevada facilities. What's going up there isn't factory space. It's rows of supercomputing centers. This tells us Tesla's capital spending has fully shifted from stamping machines to GPUs, and that shift represents a complete reconstruction of Tesla's valuation logic. Now picture this: a massive reservoir with pumps running at full power. Those pumps are Tesla's distributed compute clusters. The truth is, this isn't a car revolution at all. It's a precision surgical operation on the surplus value of global personal mobility. Tesla's conclusion is simple. Starting in 2026, every Tesla becomes a mobile money printing machine, and you'll either own the printer or you'll be paying to use it. Why am I confident Tesla can hit $600 in 2026? Because there are three decisive moves on the board. First, the FSD margin nuke. Analysts are still arguing over whether Tesla's auto gross margin is 17% or 18%, which is almost laughable. Once FSD reaches global L4 commercial deployment, what's its subscription margin? Over 90%. Every additional software subscriber is almost pure profit. Starting in 2026, as next-generation hardware costs drop below $20,000, Tesla will abandon hardware profits entirely and lock in the software market through scale. Second, Cybercab's ecosystem, level disruption. Uber and Lyft look like mobility giants, right? But look deeper. Their logic chain is fragile because drivers are their biggest cost. Tesla's Cybercab model is simple. I own the vehicle, I own the system, and I don't have driver costs. When Tesla's cost per mile drops to 30 cents or lower, the global ride-hailing industry gets wiped almost overnight. And the quiet winners may be early Tesla shareholders willing to plug their vehicles into the Tesla network. Third, Optimus and physical labor replacement. This is the wildest card. Musk has stated internally that Optimus's long-term value could exceed all of Tesla's other businesses combined. In 2026, we'll see real data from large-scale deployment of Optimus inside Tesla's own factories. This isn't just solving labor shortages, it's creating an entirely new class of labor assets. So who wins and who loses? On the surface, domestic EV startups following Tesla's path seem like beneficiaries. But look closer. Their shareholders may not be smiling when Tesla's 2026 price war fully detonates. Automakers without self-designed chips or closed-loop compute platforms will be forced into a slow-motion suicide race on pricing. Revenue grows, profits don't, and capital efficiency collapses. The real counterintuitive winners: power infrastructure companies with massive cash flows, and upstream semiconductor firms providing high-performance storage and computing solutions. Tesla's hunger for energy and compute grows exponentially no matter what. The worst hit group isn't the obvious losers. It's those heavily invested in so-called second-tier contract manufacturers, because this game has quietly shifted from making the pie bigger to cutting the pie. Tesla is using technological gaps to pull profits from every layer straight into its own center. But that's not all. The most sophisticated move lies in the final game between risk and opportunity. By 2026, Tesla will no longer depend on selling Model 3S or Model Ys. Its final form is a real-world operating system. Picture Microsoft decades ago. It didn't make every computer, but every computer needed Windows. Tesla is now writing Windows for moving objects in the physical world. Cars, delivery robots, factory arms, anything that needs to sense, decide, and act will eventually run through Tesla's Dojo compute and FSD models. While preparing this video, I reviewed every Tesla patent filed over the past 5 years. Here's what stood out. In the second half of 2025, Tesla aggressively filed patents around dynamic wireless charging and distributed energy settlement. That signals Musk's plan to build not just an information loop, but an energy loop in 2026. Imagine your Tesla earning electricity arbitrage revenue while parked on the street. You think you bought transportation, but you actually bought a node in the energy market. That's why I believe $600 isn't the ceiling. It may just be the starting line. Here's the harsh reality. Manufacturing capacity is no longer scarce. The real scarcity is the power to define the future. Tesla is defining what future labor and future mobility look like. If you're still applying rigid PFA or P-phase ratios to Tesla, you'll never earn this cognitive premium. Markets fear high valuations far less than unclear endpoints. And in 2026, that endpoint starts to come into focus. Some of you might ask, what if other automakers achieve autonomy too? This isn't just about algorithms, it's about scale. Algorithms can iterate. Data takes time. Tesla has logged tens of billions of real-world miles. That's like a postdoc competing against elementary school students. In this race, second place may not even get to eat dust. But there's another layer, Musk's personal power merging with capital markets. Notice how Musk integrated XAI in 2025. That wasn't random. In 2026, when XAI's language intelligence merges with Tesla's physical execution, a true digital god form emerges. Your car won't just drive. It'll talk to you, handle emails, and even adjust music and scent based on your mood. This isn't a cold machine anymore. It's an ecosystem that understands you. Let's talk about money flows. We're in a global asset drought. Big capital is hunting for inflation-resistant, monopolistic productivity tools. Tesla is becoming exactly that. Capital exits traditional manufacturing, flows through AI funds, and settles into unicorns with closed physical world loops like Tesla. It's a domino chain. Fossil fuel faith falls first. AI physical supremacy stands last. But every gift of fate comes with a price tag. The biggest risk behind this frenzy is regulation. If in 2026 major markets impose extreme data, security barriers, or if Tesla's end-to-end model fails catastrophically in rare edge cases, this $600 valuation tower could collapse overnight. We must stay objective. Tesla's success depends not only on tech, but on how it negotiates with global governance structures. Musk's disruptive style often clashes with entrenched interests, insurance companies, fuel tax systems. These are shadows beneath the $600 halo friends. 2026 is not an ordinary year. It's a dividing line in the global wealth map. We're standing at the edge of a massive vortex. On one side, the dusk of the industrial age. On the other, the dawn of intelligent life. First, Tesla has completed the leap from selling products to selling systems. That's the foundation for a doubled stock price. Second, 2026 is the inflection point, where software profits exceed 50%, turning Tesla's financials into an internet-style explosion. Third, Cybercab and Optimus will deliver their first real scorecards as second and third growth curves, shattering bearish narratives. Fourth, global liquidity flows will provide maximum fuel for high growth, high certainty assets like this. We need to understand this. Wealth is about preemptively owning the future. If you wait until driverless taxis fill the streets, you'll just be holding the ladder for others. Every moment of hesitation today is tuition paid to future cognitive gaps. The window may be short. Once markets fully react, it could take only days. When the bells of 2026 ring and Teslas without steering wheels move in fleets, entering then means becoming the harvested. Based on over 5,000 words of deep analysis, I've compiled an exclusive internal report overnight titled Tesla 2026 Wealth Ignition, Core Strategies and Hidden Winners. It includes stress tests on FSD penetration and a carefully selected list of 5 invisible champions, companies supplying ceramic sensor substrates or proprietary cooling fluids. These are the foundations of the Tesla empire. What you need to do now is click the pinned comment link and send the code word wealth security to receive it for free. Spots are limited to the first 1,000 early movers. Miss today, and you might genuinely regret it. In times like these, the only real security comes from deep understanding. Don't let daily candlesticks blind you. Look at the underlying logic. Look at the future unfolding. I'm here to help you see through the fog and protect your wealth. I'll leave you with one question. When cars no longer need drivers and robots replace factory workers, how do ordinary people preserve their status? Beyond owning these stocks, new skills, or the untouched corners of human nature Musk hasn't reached yet. Is this the cure for systemic problems, or a slow poison concentrating wealth even further? Leave your judgment in the comments. Every comment could spark someone else's financial awakening. We're not just watching stocks. We're witnessing the end and rebirth of an era. I'm your wealth strategist. See you in the next deep dive.